Hello traders, welcome to my YouTube channel once again. My name is Andre. Thank you for being here. As always, it's always a pleasure for me to share my views and to get your feedback. For today, I have a few charts that I want to share with you, a few patterns the market, or at least my view or my insight regarding those patterns I tend to search for inside the market. And that being said, I will start with the Dixie. This is 12 hours, a daily time frame, 12 hours time frame. Sometimes I go into a lower time frame. But let's note on a daily time frame, this is a 200 daily moving average, and we are now facing that moving average again, as you can see, the market multiple times respecting that moving average, um, multiple times, as you can see, including these inverted head and shoulders here, well supporting with the moving average supporting those shoulders there. So let's pay attention on a daily perspective, on a daily time frame. Let's pay attention to that moving average approaching from above. So let me decrease my time frame here and let me show what I'm seeing here. So everything that I will show you here is just my approach, my views inside the market that I tend to use to trade the market, and and I also share these approaches or these insights with different traders and different persons. Well, that being said, nothing that you see here is granted. So it's just one probability for something to happen, and if that happens, we already know what to do accordingly to that same price behavior. So that being said, I search for a specific conjunction of variables forming a pattern, forming a specific price behavior in general, which allows me to put my capital at risk with a interesting or with a friendly risk reward approach. So nothing is granted. So I can spend 1 hour talking about patterns that will never complete. Okay, so at the same time they can complete and they can fail. So that being said, it's important to pay attention to specific details as risk management, position management, money management, and the price action indeed. So in fact, if you are a technical trader, you need to understand there will be a price level where the pattern will fail, and you need to manage your risk accordingly to that same portion of risk that you need to assume, based or supported by the price action, or supported by the pattern invalidation level that you are trading. So that being said, I hope you enjoy this video as an educational content only. I'm not here to well to incentivate you to put your capital at risk. The objective is to get you synced with a trading concept that you need to create and to understand and to develop in order to trade the market. So that being said, let's jump into this Dixie on a 12 hours time frame. As you can see, this is we are now approaching a descending trend line resistance. It was acting as a potential resistance, and we are now trading above or threatening the daily fractal horizontal resistance also. So that was printed January 10th, so at the start of this year. Well, and that being said, we are now threatening that level. In terms of when I search for advanced pattern formations, I search for, first of all, I measure those Fibonacci ratios, and based on what we see here, there's also a possibility for the market to trade higher, actually breaking that trend line, and form patterns above. So first of all, we are trading the 88% Fibonacci retracement from this structure high, so which is an important level at confluence. When at confluence with the price structure, in this case we are facing this trend line resistance. So with the 88% Fibonacci retracement there, and we are also approaching the 200 moving average on a 12 hours time frame. As I said before, we are also facing a daily moving average at the highs of this structure. So at those highs, actually the monthly fractal was well supported by the 200 moving average. So that being said, when I search for advanced pattern formations, I search for those Fibonacci specific ratios. And based on what we see here, there's a possibility to see the market trading higher from here, from these levels, if the market decides to reject the recovery of this trend line. So if the market decides to reject, continuing to trade lower, so if the market decides to violate this bearish momentum, or at least the most recent one, there's obviously the possibility for the market to trade higher. So there are a few levels that I want to take in consideration. So let me just adjust those levels. So it's a 98.72. So this is the 168 extension. It is a completion point for multiple advanced patterns, because actually they both depend on this previous swing, this last swing low. So based on one extension from this swing low projected above this resistance, above this structural resistance, at 168 extension. So basically we search for, as soon as the market violates this structure, and we can tag this price here at 97.82, so these previous structure highs. As soon as the market violates these, and if the market violates above these levels, I will start to consider the possibility to form that pattern above. So there are two different patterns there. One major shark pattern, so this false breakout below these previous lows, and again, if the market violates these highs, we will start to project that pattern, and that will increase the possibility for the market to form that pattern, a new high above the weekly fractal. So this is a bearish shark pattern extended at 168 extension. Note that will depend on the market conditions and the market environment. Once the market approaches that level, because as we know, the shark pattern can also extend, and actually they can both work in our favor. It's not the first time that we will see the market respecting both of the levels. So the 168 extension offering some pressure and forcing the price to fall, and then new highs, searching for a retest of the major fractal above. So, but that being said, the first level that I will start to pay attention for, the Dixie, if confirms a breakout above 97.82, I will pay attention to those levels. So a retest of these highs imminent, and a new high above those, just to print those patterns. Of course, if that if that happens, I will start also to plot the possibility for convergence between some of those Fibonacci levels, and basically just to pay attention for the golden fib just right below the weekly fractal at 98.40. So this is the 61.8 percent Fibonacci retracement, and well, there's no perfect confluence at this point between those completion points and a retracement level. Let me just get clear to this about this 200% Fibonacci extension is nothing more than an extension of this swing. Actually, let me just clear this because that's not correct, I think. No, this is not correct. I was seeing the possibility for a potential inverted edge and shoulders, but that's not the correct measurement. Let me go into candlestick formation. Let me find those closes above and below, and let me extend this to the 200% Fibonacci extension, quite a few points above. So 200% Fibonacci extension. This is a remote and unorthodox kind of inverted edge and shoulders, and if that happens, we will see. Well, we may see also the DXY trading above those levels that I mentioned before. Searching for those levels will not be a surprise at 99.08. 200% Fibonacci extension from this last swing low, close prices extended above at 200% Fib. So this is my view for the DXY. Obviously, there's always a possibility for the market to fail to trade higher. From there, we need to pay attention for what will happen around these highs. So let's see what the market will form there. So that being said, we have that bearish shark pattern on hold on 98.72, but we have also, and let's draw it again, an internal crab pattern, a deep crab pattern. In fact, this major pullback here, this deeper retracement after this fall, the market has pulled back again, retesting these highs. 38% Fibonacci retracement as a support, and then the market starts to trade higher. If that happens, and at confluence with the same price, with the previous pattern that I mentioned before, we have this deeper crab pattern. So we have both patterns projected at the same price level because they use actually the same extension level to complete, and based on the criteria and based on the price action that we have at our disposal at this point, that will not be a surprise to search for shorts once the price retests the weekly fractal resistance above. So obviously that bullish momentum, for that eventual bullish momentum for the DXY, should be synced with bearish momentum for the euro versus dollar. And let me try to go, I need to decrease my time frame here. As I said, so if the DXY starts to trade higher, we may see that these heads and shoulders that we have here actually triggering or triggered, and in fact we're still trading below that next zone for this head and shoulder. So if this is actually our right shoulder, we are now threatening the eventual recovery of the neck zone for euro versus dollar. So that being said, let me just push a trend line here. So if this is our neck zone, this is our reinforcement of the neck zone, our right shoulder that I was expecting to be formed and supported by some of those harmonics on hold above. So I was expecting the right shoulder to form very close to the highs of the left shoulder, at least completing this bearish internal bat pattern at 111.92. So that was my expectation, but at the same time I was pointing to this symmetrical three-wave structure, symmetrical behavior at 127 extension and the 50% Fibonacci retracement from all this structure, from these highs. So at that time we were facing the 50% Fib with a symmetrical three-wave structure printed above this major trend line, descending trend line resistance. So as we can see, it's not an easy task to actually break a major trend line resistance. It comes from higher prices actually, with the price actually retesting and recovering that trend line multiple times, as we can see here. So basically we are now trading, we are again trading below that major descending trend line. I will say that we have triggered the head and shoulders formation, well supported below with some fractals there. So let's see what will happen from here. But we have also this most recent ascending trend line as potential support for euro versus dollar. So that can be a bit tricky to understand. If you are expecting Dixie to trade higher, we may see euro versus dollar breaking below this major trend line. So let's keep focus on this lower time frame chart. Actually we can actually decrease a bit more into 2 hours time frame chart. Let me clear this next zone support line, and let me clear some of those fibs that we don't need here. So we don't need nothing above the 50% Fibonacci there. This will not happen, so I don't need to pay attention to those fibs anymore, at least for now. I can keep that level there, and I don't need these. So this is what we have at this point. So basically, well, the idea for a recovery from these lows will start to vanish if the price breaks below this previous and most recent support level. Obviously, we need to see a clear attempt of a recovery on euro versus dollar from these levels. If this level fails as a false breakout, let's say if this fails as a false breakout below these previous lows, and this major one fails as a false breakout from this previous one, so I'm considering this as the next or a second bottom, a false breakout below these levels, which should trigger more upside momentum. But if that fails, we will see euro versus dollar sinking and giving sequence to the higher time frame head and shoulders that I show you before. So let me try to adjust these, because I need to show you what may happen below. So basically I'm focused on those two levels, so on those highs, and I will try to search for an extension from this last swing high to the 1/600 extension, or even actually the 224% Fibonacci. So those are the two levels that I will start to pay attention. If the DXY starts to trade higher, dollar index, we may see euro versus dollar starting to trade lower. And if that happens, I will pay attention to those two levels. First of all, the 1/600 extension, 110.62, and then if the market fails to find some support there, 110.19. So those are obviously short-term price level perspectives, because as I said before, the head and shoulders will put the price trading, at least we have projections for that higher time frame head and shoulders around 109.53, right below the weekly fractal support printed last 29th of November, so last year. And the retest of that weekly fractal, it will not be a surprise. But that being said, this higher time frame head and shoulders, if actually triggered, it may put the price trading below that fractal. So, and we have also another, and I projected this pattern before, another level at the 1/600 extension below. It's nothing more than an extension from this previous structure high, this previous swing high, extended below. The same concept that I'm using here, extending this very last swing high and searching for an extension below. If that happens, I will pay attention for the possibility to form these patterns below. Until there, we pay attention to smaller details and to smaller patterns. Eventually, if you want to trigger some of those events during that process, we can try to find shorts during that process. We can try to find a potential reversal during this process also. So there's a lot of things that we can do. So basically we search for a pattern that offers us an edge, something that you can backtest and prove yourself that works more often than the times that will not. So actually we need to trade something that you believe will create some money for you. So it's not just because they are funny or entertaining. We need actually to print some money with those. So, and that being said, the idea trading those patterns is actually to find a specific price entry offering pre-default targets, predefined targets, with the most interesting and friendly risk-reward approach, nothing more than that. So, going on. So again, if this fails as a false breakout below the previous lows, which can also and breaking above these highs will also increase the possibility to form patterns above, and we have some interesting confluence with the 224% Fibonacci extension nailing the previous structure highs, nailing the previous daily fractal. So basically we are talking about one at this point is completely surreal, because we need to actually see the market bouncing from here and breaking above these highs. So again, as soon as the market breaks above these 111.18, we may see more upside momentum, and again 1/600 extension and 224% Fibonacci extension nailing the previous structure. So basically the same two levels that I will search below, I will search above if the market confirms this as a false breakout. Okay, so let's wait and see what will happen. Nothing specific here. There's no event to trade unless you are considering this major or higher time frame head and shoulders, which can eventually trigger below the most recent lows. At least I like to consider something very close to these lows to trigger as a trigger for the pattern. At this point, nothing assures me this is actually the right shoulder. It looks like the head and shoulders, but who grants us, who assures us the market is not reinforcing the neck zone again? No, let's wait and see. It's not the first time, specifically for euro versus dollar, it's not the first time that happens. The market printing kind of an ascending neck zone or an ascending support level, acting as a neck, with the price finding some consolidation right, or crossing this trend line, crossing the neck zone, and then failing and printing new highs from here. So let's wait. Let's not rush, and let's wait for some confirmations. So that being said, that's my view for euro versus dollar. Let's pay attention for the eventual more bearish momentum triggering that major heads and shoulders. A bounce from these levels and the breakout above these previous structure highs may trigger more upside momentum. At the same time, if the market fails those projections and fails to break above, we should pay attention to those levels below, between 110.62 and 110.19. Let's move on into cable, and let me just check the 12 hours time frame or a daily time frame. Okay, that's what I want to show you. Mentioned before, I shared this pattern before the completion point, projected a 224% fib. The market reinforced that pattern, that bullish sharp pattern, with a monthly fractal support, and later with kind of a double bottom, and then it has entered into this bullish momentum. There were a few patterns that you were that we can take advantage from. One of them specifically above this consolidation process, a clear bullish flag pattern there. With the project, at least I projected this pattern based on the very last swing high. So this very last impulsive swing, this very last impulsive momentum there, projected above the breakout point, or at least we try to get a close price or a close projection. So, well, that being said, breaking above this flag should trigger more upside momentum, as you can see, the market nailing that projection, and also the golden Fibonacci retracement from these previous structure highs from April 2018 highs. So the market has nailed that Fibonacci golden fib there, and it has started to pull back as expected. We have a few patterns there also completing. Now, on a daily time frame, on a 12 hours time frame, I'm paying attention to these structure trend line support. So if the market fails to hold above this trend line, we may see the cable being forced to trade even lower. On a 4 hours time frame chart, I published it before. I shared these at that time. I shared the eventual Gartley pattern, expecting nothing more than a 38% Fibonacci retracement as a first target. I break even my trade, and then the market break even my position. So I'm out from this trade. But the market still respecting these most recent, at least for now, it's a virtual trend line. The market can simply ignore that trend line that I draw there, but it's previous structure support trend line extended, and as you can see, the market respecting that trend line. Actually, the market is also violating or trading a few points above, or trading actually above this trend line resistance, this descending resistance trend line. So nothing specific here for the cable. In fact, I still, well, I will say I'm neutral at this point for the cable. Nothing in terms of advanced pattern formations. There's nothing specifically to pay attention for. I will not ignore the possibility to trade the second target for the pattern. Let's wait and see what will happen from here. But nothing very specific. Then OSI, 12 hours time frame chart. I'm following this one from. Actually, I took some longs during this process. From this 50% Fibonacci there, a few points below, I was expecting the golden fib, but when I saw actually a few points above this 50% Fibonacci was my entry. When I saw the price recovering this 200 moving average, and there's one specific reason why I entered this trade, and because if you go back and it happens even if you keep trying to search for those levels previously, you will find them. The Aussie finding pressure, huge pressure at the golden Fibonacci retracement as support and as resistance, with the price finding multiple times support on those areas and resistance. So at some point when I saw that, I started to think, okay, I will take advantage as soon as the price approaches the golden fib. I will try that. The market has failed that golden fib, and when I saw the price trying to recover from this trend line, this moving average, and the 50% fib. And because when you start to think, okay, now that the market has nailed all those Fibonacci levels, golden fib levels, I will wait for the market to nail that Fibonacci level, and the market will fail you. And that being said, and considering that knowledge, that time I decided, okay, I will enter the trade, even if the market decides to trade lower, I will take that risk. And well, not a huge long, but I traded to the trend line. When I saw the price finding some pressure there, I decided to exit my trade. In fact, it was just in a 12 hours time frame or a daily time frame. It was a day trading that market. So it was during one session, the market decides to retest that trend line, and I exit my trade. Then the market rallies above and printed this nice pullback here. Again, well supported by the golden fib, and printing this eventual. At that point, I was seeing this as a potential edge and shoulder. So if this is an edge and shoulders, we are trading below the next zone, but we are also retesting multiple trend lines. One of them, this major descending trend line as resistance, it's now a support, the market nailing that trend line. And we have this ascending trend line as a support also, eventually being reinforced at this point and well supported by the 200 moving average. Actually, let me see what we have on a daily perspective. On a daily time frame, we're still trading below that 200 moving average. Also, and the recovery of that moving average should trigger more upside momentum also. So let's see what will happen on a lower time frame. We are now facing that 200 moving average on a 12 hours time frame chart. So let's see, let me try and let's use the most usual 4 hours time frame chart pointing sideways. So I will not expect the market to keep trading lower from here. I believe the market will be well supported for the Aussie at this point. So which puts the question what may happen for the Dixie also, which may have some impact on Australian dollar versus dollar. So let's wait and see what will happen. As we can see, we are also facing the golden Fibonacci extension, the 168 extension. The market has found some pressure around that Fibonacci extension level, which guides us into another sequence. Okay, the false breakout above these previous structure highs, a new fractal resistance, a new 4 hours fractal resistance printed above, and the 168 extension. So that being said, this is the sharp pattern completion point, but we have also, and we know that the market can complete the sharp pattern at 224% Fibonacci extension. If that happens, and let me clear this pink line, this eventual next zone there. If that pattern gets formed, we may see the price searching for the 50% Fibonacci retracement. This retracement can happen from these lows. If that happens, we may see the price retesting that fractal before printing new lows, if that is the objective later. But from here, from these lows, projected above the 50% Fibonacci retracement from all these highs, from this structure, from this swing low, projected above, retesting the most recent 4 hours fractal support. If the market fails and it finds some pressure with some convergence between the golden Fibonacci retracement and that Fibonacci level, the 224% Fib, if the market decides to fail and fall to those levels, we may see a recovery of those losses to at least to the 50% Fibonacci retracement. Note that to form this bullish sharp pattern at 224% Fibonacci extension, the market needs to recover not only this major descending trend line. The market has violated that trend line. We are now actually threatening or retesting that trend line. But if the market fails to hold above and to actually, if the market recovers that trend line, it will be forced to break below this ascending trend line also. So that may also trigger some more bearish momentum. So I will not say the market will retest a monthly fractal immediately. I believe the market will need to bounce at some point. What I'm saying is, just because we have the pattern formed, completion point there, not formed, but completion point there, it's not, nothing assures the market will not trade a few points lower and then bounce. Let's wait what will happen from there. Golden Fib, it's an important Fibonacci retracement level. At confluence with that level, it will increase the probability for a decent bounce from these levels. But again, we need to take into consideration also these trend lines. But until there, and for now, this is just a virtual trend line, and they are there to be broken. If the market decides to reinforce that trend line starts to get strength, and it may have a different impact later if the market decides to trade higher and to retest this trend line again. So let's wait and see what will happen here. The market is, for now, we're still trading below that fractal support printed at these lows. So a recovery of this fractal support will also increase the probability for the market to trade higher from those levels. So then we have the Kiwi, and the Kiwi is very so it's simple as this. We have this bearish bat pattern at 88% fib, this gray M shape kind of or W shape, I'm sorry, kind of bearish bat pattern, and at the same price level, and actually the market almost nailing that 224% Fibonacci extension, this sharp pattern extended at those levels. So basically we have two different patterns that tends to complete on completely different scenarios, because one of them may act as a potential reversal as the bat pattern, and usually the shark pattern it will offer us a retracement, or actually just a retracement. It will not act as a potential major reversal pattern. Okay, so we are confronted at this point with two different patterns completed at the same price level or same price zone, but that tends to appear and to complete on different scenarios. Basically, these shark pattern completes with an impulsive swing, so an impulsive momentum, which usually breaks a consolidation period. So there's a consolidation box there, the market moving sideways, actually printing this ascending wedge, and then a violation of this structure with a very nice indication there of that breakout, with these two candles breaking above this structure highs and breaking the structure and forcing the price to trade higher. So there's a clear consolidation period and a box there broken above, and that's how we start to identify that's how we start to consider the possibility to form shark and crab patterns above with an extension, correct, but with an impulsive momentum. And for the bat pattern, usually will not complete with an impulsive momentum, will in fact start with an impulsive momentum. It may start with an impulsive momentum, or at least most of the times we will search for the bat pattern starting with an impulsive momentum and then finishing or completing with a three waves, kind of an ABC or an ABCD pattern, kind of. So that being said, the bearish major bat pattern, 88% fib, the market respecting that level, and the major and the lower time frame, or not the lower time frame, but the lower degree on the bearish shark pattern, projected at 224% fib. And it's very simple. We didn't reach the minimum expectation for any of those patterns. For the bat pattern needs to trade the 38% fib. And by default, the shark pattern will search for the 50% Fibonacci retracement at 64.81. So there's a lot of room there for the Kiwi. Let's wait and see. So I still waiting for at least a minimum 38% Fibonacci for the Kiwi. Australian dollar versus New Zealand. And this is what I have. I mentioned it before. I tried the long with this bullish shark pattern at 224% fib. The market offering some pressure there, the fib offering some pressure there, but the market deciding to violate that structure, that pattern, to invalidate the pattern, which I decided to quit the trade and to exit the trade, and well, that's what it is. I still believe, at least based on what I see at this point, I still believe there's possibility for a bounce around these levels, these lows. Let's wait and see. I will, at this point, I just want to, I will believe in that if the market decides to break this daily fractal at 104.59. So this is this is previous structure highs. So if the market decides to trade above those highs, it will trigger the inverted edge and shoulder that I'm projecting here. That may put the price trading a few points above actually that 200 moving average, that 200% Fibonacci extension, nailing this very most recent pivot zone or previous pivot zone here between previous support and resistance levels. So not a very specific price zone, actually just previous structure highs and lows, not so important. But let's not ignore also taking this into a major perspective. Well, eventually one edge and shoulders here, eventually with this neck zone ahead, the reinforcement of the neck, one eventually right shoulder, searching for the 200 moving average, eventually searching for the 38% fib. Well, let's wait and see. I will not put my risk at this point for Australian dollar versus New Zealand. I prefer to wait. Once a pattern fails, I prefer to wait for the next pattern to trigger, and at this point I have nothing for Australian dollar regarding this price action, or this most recent price action. So let's move to another one. CHF. Nice bounce from, or at least very close to the 113% Fibonacci extension. I projected this pattern before. I'm not sure if I shared this pattern on my previous video. Actually, I believe so, or at least some of those levels for sure. CHF, I started to project this bullish shark pattern at 224% fib, the market offering nice support there, but rejecting to trade the default targets at that point. So we need to adjust these to these lows. This Fibonacci retracement needs to be adjusted to the previous low. So this was at the default target. Once the market starts to bounce from these levels, we adjust our retracement Fibonacci levels to get a clear picture for our targets. The market fails to achieve those levels and prints a new lower low. So basically, let's check what we have here. We have nice bullish divergence supporting these previous structural lows. That's one of the reasons why the market has traded, has bounced from these levels, and we are now actually retesting. Like, let me just draw this trend line here. We are threatening kind of a trend line resistance here. Well, let's see how the market will react here. At least it's offering some pressure there. CHF, bullish shark pattern, bullish alt-bat pattern, 113% fib. We need a clear recovery of the daily fractal resistance, or at least we need a price trading above 97.62. That may increase the possibility to trade even higher from here, but do not forget that we are trading below, and let me go into a daily time frame. We're still trading below this eventual, and at least for now still as a virtual trend line support. We can also, let me adjust this trend line to these previous structural lows. So we're still trading below any of those trend lines. One trend line supporting all these sideways moving process, and if you take the trend line from these previous structural lows, and if you draw a virtual trend line, at least it needs to be reinforced, we can see the market nailing that trend line there, a bounce, and then a fast breakout below. So we're still trading below this trend line, so we need to pay attention to that. Obviously, a recovery of that trend line support, or this previous measured ascending trend line support, now as potential resistance, will increase also the probability for, or let's say, a retest of this descending trend line resistance. Let's pay attention to those levels. Previous structure support may act as resistance. Most recent resistance or previous structure highs needs to be wiped out before considering to go to trade higher from here. And assuming this as a false breakout below, as always, we take our Fibonacci extension tool and we search for an extension of the very last swing low projected above, golden Fibonacci extension, and the 224% fib, and again, and always the eventual reversal shark patterns between the 161 and the 224% fib. So let's say the 224% fib will put the price, or it may put the price retesting this trend line again. If that happens, we need to wait for, at least for now, we need to wait for a clear breakout of this most recent bearish momentum or bearish structure. In fact, if you put a trend line to the previous structure highs, eventually we are already trading above these trend lines. So, but you need to consider a lot of things. But well, assuming this trend line or a default trend line covering those highs, we are now threatening, at least, or trading a few points above this trend line on a daily time frame perspective. So I don't pay too much attention to those trend lines and to those breakouts unless I'm trading a very specific pattern as a flag or a triangle. That usually I wait for a retest of that breakout, of that structure, to create an attempt to go short or to go long in a specific market. But at least for now, I will not pay attention too much, at least too much attention to those trend lines. So so as I said before, two levels above to pay attention for. We are now threatening with a potential false breakout. Let's wait what CHF will print for us, considering that we're still trading below this major ascending trend line as a support. The Canadian dollar, I published this chart before, but projecting. I never expect the market to trade in a specific direction, and unless I have a specific pattern printed already. So at this point, I can start to project patterns there. I have patterns above. I have patterns very close to the weekly fractal resistance. And if I want to project patterns below, I can start to project patterns below also. So based on what I was seeing at that time, and I still believe that may happen, we have this sideways moving process, and we have the price actually threatening a breakout of this eventual or virtual trendline resistance. And I said, okay, if the market decides to break higher or break above this trend line, and actually the market needs to remain above this fractal resistance, if that happens, we may see symmetrical behavior approaching the golden fib 131.84. So this is the default projection that I used for those shapes or for those patterns. If that happens, I will start to project a symmetrical behavior. If a breakout happens, what happens next, once I publish this chart, the market violated this structure in the fractal and then starts to fall again. So at this point, I can consider this as a retest of this structure, and I need to see a clear and evidence and a clear bounce from these levels to consider a bullish scenario. So I need the market actually to give me a signal that okay, we have violated this descending structure. We have retested this structure. We will reject this previous structure support now, and we will trade higher from here. So basically, if the market decides to break above the most recent highs, that may trigger more upside momentum. So I don't care what will happen here, unless if the market decides to recover below this triangle and decides to break below, then obviously that will I will start to not pay so much attention that is, at least considering the pattern that I'm seeing here. I will lose my interest, and I need to change my perspectives, obviously, my views. But assuming a breakout above these levels, that may trigger more upside momentum, and eventually it may offer some points above. So there's also, let me just push another retracement here because I need to measure this pullback here. Let me just check if we have, I believe we have a golden Fibonacci here. Yes, we have. So we have the golden Fibonacci, the 61.8% Fibonacci as resistance. It has failed as support, I believe, below. It has failed as support. So, but let's not ignore that 127% Fibonacci extension. So this is kind of a Gartley pattern, a bat pattern, internal bat pattern there. So there's a box that may offer some pressure with limits at 131.55. So this is the 88% fib from this structure highs to these lows. And that being said, that may offer some, as I said, may offer some pressure there. And of course, if the market decides to violate these previous structure highs, we may see the price trading even higher without ignoring a false breakout above these highs with the alt bat pattern at 132.12. And if those levels fails, we may see a retest of the fractal printed above. So at this point, again, options, a clear bounce rejecting the recovery of this structure and a breakout above these previous and most recent highs should trigger or may trigger more upside momentum. Do not ignore that we're still trading a clear bearish momentum. We have the 200 moving average also giving you some signs there. So we still inside a bearish momentum, and this looks like a corrective momentum or corrective swing after this bearish and strong at least most recent strong bearish momentum. So this is nothing more than a correction. It's expected, we expect to see more bearish momentum for the Canadian, but it can fail. We can see eventually the market reinforcing this fractal support again. Note that we are trading, we are recovering the monthly fractal support once broken. So this was our monthly fractal support somewhere around where, let me just check these. I need to go into monthly fractal support there. The market has violated this monthly fractal and it has reinforced the new low with a new fractal there, the weekly fractal, and we are trading between the daily and the daily support, obviously, in the daily fractal printed below and above. Actually, I believe this is already the Canadian dollar. I believe we have, no, the daily fractal still positioned there. We have actually the 4 hours fractal support and resistance adjusted to the most recent highs. So we have the fractal resistance here and these previous lows as support. So basically, as I said before, we are now threatening this trend line. That if there's a clear bounce and a clear breakout of these highs, should trigger more upside momentum for the Canadian, with some pressure levels above, starting with actually the 88% fib, or very close to that level, 131.55. We assume the market, if the market forms this pattern, the market needs to respect this high. So if the market starts to trade above these highs, we will invalidate the pattern. So you already know where the pattern will invalidate. And if that fails, we may see the Canadian dollar searching for higher prices. Let's wait and see for what will happen there. The Norwegian krone, I shared this before with some of you, at least for those who are checking my previous video, calling your attention for a potential bounce from this trend line. So basically, this is a major trend line supporting these most recent and previous lows. And when I saw the 113% Fibonacci projected there, and when I saw the price starting to fall, I projected that pattern, saying, okay, there's a golden Fibonacci from these previous structural lows, there's a 113% Fib, and there's one ascending and major ascending trend line support. So if that pattern forms, I will try to take advantage from that pattern. Minimum target 38% Fib, so already adjusted to these previous and most recent lows, the weekly fractal. A retracement to the 38% Fib, the market is already trading those levels. Break even your trade and start to cut and start to partitioning your trade. Second target above, trailing, dynamic trailing stop should be activated in order to take advantage from eventual rise on prices, and with our stops automatically following the same portion of momentum. So this is what we have for the Norwegian krone. Nothing more than showing you the previous pattern format below and targets achieved. Mexican peso, in another way, we're still trading in a very interesting position, at least for those who are searching for longs for Mexican peso. And beside the fact that we are also trading below one trend line ascending support, so we can see this trend line being violated. We are trading below that trend line support, but just because we are trading below, it's not granted that the market will keep sinking for indeterminate periods of time. So the market needs to pull back, needs to pause, needs to try to recover some losses, and then it needs to resume again the trend again later. But during that process, we can try to identify some of those pressure levels. So at this point, what I see for the Mexican peso, beside the fact that we are trying the recovery of the monthly fractal support printed there at April from last year, so we are attempting the recovery of the monthly fractal. We are trading the 127 extension, and that will depends how you measure this structure. But at this point, I have two clear major swings, actually three swings, 1, 2, and the third wave. So basically, we are trading actually we are trading exactly the 127% Fibonacci from this first swing, um, and I expect nothing more than a 38% Fibonacci retracement here. So this is a very basic three waves um, structure at 127 extension. So basically, after that swing, I expect nothing more than a 38% Fibonacci, or at least something close to that. And increasing the probability for that weapon, um, we have this alt-bat pattern at 113% Fibonacci. Actually, there it's a 113% Fib from all these bullish swing here, so extended a few points below, so we push our Fibonacci extension tool and we project this swing high, swing low, and we search for the 113% Fibonacci extension. That is the completion point for the bullish alt-bat pattern, or actually that is the completion point for the alt-bat pattern. In this case, this is a bullish bat. And that being said, we have also these this wedge, and that being said, if you go back on history, you can see a few similar behaviors printed before. And going back into previous historical data may help you to identify some of those patterns there, and we can try to take advantage from similarities, no? So that will help you also to identify those invalidation points, which are, in my point of view, very important. What's benefit I take from a pattern if I don't know where the pattern will invalidate, you know? So if you don't know where the pattern will fail, you will lose for the risk management. You will lose some points for the risk management strategy. So if you don't have a decent strategy to trade, and to have a decent strategy to trade, you need to understand how the market behaves and where it will fail you. You'll never take advantage from, or the real advantage, you'll not take the real advantage from the market, or because you'll put your stops extended, or because you will start to adjust your stops during the trade. Thing that you don't need to do if you already know by default where the market will fail. You already know where to put your stops. So that being said, now we are facing this bullish pattern for Mexican peso, and let's wait and see. And we are now threatening the breakout of this trendline resistance. I'm waiting nothing more than a 38% fib. Let's wait for not so related with the Dixie, but the dollar strength may help. Obviously, all dollar-related pairs to increase their level, their price levels. But if the same way, if the Dixie, if the dollar index starts to fall, and depending on the strength of that same fall, that may also provoke some damage for the Mexican peso. So, and if that happens, I will not ignore the formation of this scrap pattern extended below at 18 at 168 extension 1809. So that's where the pattern will complete. We never know if the pattern will complete there, but if the pattern fails above, we can start to assume, okay, if eventually the price will search for other pressure levels. Note that we are also trading the golden Fibonacci retracement there, so let's wait and see what the market will offer from here. That being said, the only pattern that is completed is the one above. Obviously, this is the one that you need to pay attention for. What will happen next, we never know. So now that's a fast view for some of the yen pairs. So basically, I want to call your attention. Let's please ignore these lower time frame draws there. Let me just try to show you. This is a major trend line. So this is 2 days, a weekly time frame. You can see this in the 2 weeks, but let's go into a weekly time frame chart. So basically, this is a major trend line resistance, and we are in fact, if you go into a 4 hours time frame chart, we are now threatening this, we are rejecting this trend line resistance. So basically, what I want to show you here for dollar versus the yen, this bullish shark pattern printed at 168 extension, new weekly fractal support. Actually, the daily support, I believe it's already or not. Let me just check this. Daily, no, the daily support still, the daily and weekly support still positioned there. And yesterday or a couple of days ago, I shared this chart saying, actually yesterday, saying, okay, eventually the market will reject that major trend line again, or at least for some period of time. And if that happens, that may trigger some these eventual heads and shoulders. So this is what we have at this point, nothing very specific. We have also the 224% Fibonacci extension, just a few points below. Let me just show you this. I want a 224% Fibonacci extension. As you can see, we have actually the next zone for our edge and shoulders well supported with that Fibonacci extension. So it's an extension from this previous swing low. This previous swing low extended above. Again, we are talking about the eventual reversal Fibonacci extension between the 161 and the 224% Fib. This completes another sequence very similar to the previous one extended. Something like this. Bearish shark at 224. The market has decided to ignore, but not completely, because as we can see, the market has decided to use this Fibonacci level, this price level, as a potential next zone. So now if the market decides to break below, that may trigger these heads and shoulders. It's a smaller projection. We have smaller projections below, or at least very close projections below. And we have also the 168 extension from this structure, this swing high. And basically always the same process. Identify a false breakout and extend it to the 168 extension. That may offer you a nice pressure there, and eventually it will offer you a bounce from those levels. Sync at convergence or converging with the 200 moving average, with the 200 Fibonacci extension, which is the default projection for that edge and shoulders formed above, or at least under formation at this point. So this is dollar versus yen. We need a clear breakout of those levels. Euro versus yen, also published before completing, projected at 122.80 at 113% Fib. This false breakout above these previous structure highs, printing this alt-bat pattern, also with another false breakout here, kind of a double top, but with a false breakout above these most recent highs, and the market finding some support at 168 extension. Again, the same process, an extension from the last swing high extended below 161, the market finds support, starts to bounce. 38% fee, which is also the default target for this bearish alt-bat pattern printed above, the blue bearish bat pattern. So targets achieved, the first target achieved there at convergence with this golden Fibonacci extension as potential pressure levels. So let's wait and see what will happen. This completes also the bullish 5-0 sequence right there at the 50% fib. Actually not there, actually here. Not here, I'm sorry. I need a Fibonacci. Need to drink something. Okay, 168 extension, bullish shark pattern, default target, 50% fib. Let's correct. Let's put 50% Fibonacci retracement. As you can see, nailing the fractal, the previous fractal resistance. So basically this is the default expectation for the shark pattern, and that may form the bearish 5-0 sequence. That was what I meant. 50% fib, previous structure fractal resistance, bullish shark printed below, so default target will print that sequence, which may offer more downside momentum for the pair. If that happens, I will not be surprised to see the 224% Fibonacci extension later, completing the pattern twice, kind of something like this. The first one at 168 extension, and then an extension to the 224% fee, offering another opportunity or another eventual bounce from these levels. So let's pay attention to this. Nothing is granted just because I'm saying this. The default target is there. There's no one assures me the market will actually trade there. But by default, and considering previous and historical data for that specific pattern, we may see the 50% Fibonacci retracement, which may offer a nice opportunities to go short again. Let's wait and see. At this point, those are just virtual expectations. We need the price to confirm that, and if that happens, we already know what to do. This is euro versus the yen, and let's move to the Australian dollar versus the yen. Again, very similar to the dollar versus yen, which has printed that crab pattern. We have also the Australian dollar being pushed to the or extended to the 168 extension. Obviously, this was during those external events with United States and Iran. Well, and during that night, obviously the market was shaking a little bit, and even during those events, the market tends to produce those patterns. So as you can see here, the market nailing the Fibonacci extension, it producing immediately an immediate bounce from those levels. I saw this as a potential inverted edge and shoulders. I was expecting the price to trade a few points lower to reinforce this right shoulder, but always considering this level, the 75.15 as a trigger point for the edge and shoulder. So even if the market fails to form the right shoulder, it triggers a nice bounce above those levels. Default expectation 76.28 as published before breaking these levels. I was saying, okay, if the market breaks there, the default expectation or default projection for these head and shoulders will be positioned at the daily at these levels. Now the daily fractal resistance. False breakout above, again extended below 168 extension, very similar to the previous yen charts. 168 extension, finding some pressure there, some support level, and I was saying, okay, a bounce from these levels, 50% fib as a default target for the shark. Let's wait and see what the market will offer there. Another bearish 5-0 sequence may emerge there, offering more bearish momentum. At the same way, I was saying, okay, if the market fails, because the market can fail to bounce from these levels, attention to the next level at 224% FIB, 74, 75, and convergence with the golden Fibonacci, 61.8% Fibonacci retracement there, so a nice and interesting price zone there. So let's wait and see. If the market trades there, we will trade the 50% FIB, 55 50s again. Let's wait and see what the market will print here. But at least for now, I believe the market is reacting well from these levels, from these pressure levels. So let's wait and see what they will print for us. Another one, very similar one, New Zealand versus the Kiwi, New Zealand versus the yen, I'm sorry, print or projected at 73.19 before the completion, before the completion point. Actually, I was seeing the breakout of this structure here, the market reinforcing this or retesting this trend line now as a potential support level, and I started to project that pattern above. So a breakout above these highs, and we start to project a pattern above 168 extension, 73.90. The market not nailing the fib, but respecting that Fibonacci level, started to fall. Let's draw this pattern here. It has started to fall, and it has already achieved the default target. So basically we see the 50% Fibonacci retracement there. And yesterday I shared this chart, and I shared, let me just delete these yellow dots here. Actually, the market failed the 50% Fibonacci retracement, but keep that in idea. 50% Fibonacci as a default target for this bearish sharp pattern printed there. False breakout again, false breakout there between these previous structure highs and between the most recent highs. An extension to the 161 that may put the price trading the 71.74. Basically, we need the price to find some decent support below. Obviously, nothing is granted, as always. The market can find some decent support there. If that happens, one eventual right shoulder, as you can see here, I projected this as one eventual right shoulder. We still need the right shoulder to form. I'm not saying the market will needs to trade so high to form the shoulder. One eventual retest of that fractal at 72.81 will be enough to form that right shoulder. But the trigger point below the daily fractal, so trading below the daily fractal, that may trigger more bearish momentum for the pair. The default projection for the edge and shoulders approaching the weekly, projecting the price very close to the weekly fractal, with extensions. With the 224% Fibonacci extension actually just a few points below. So that means those are the levels that I will pay attention for the New Zealand versus the yen. But at least for now, I will wait for the eventual formation of this right shoulder, and that may trigger more, and later a breakout of this fractal support may trigger more bearish momentum accordingly. Or based on or supported by that pattern expectations, no? So let's wait and see. And to finish, and because I know there's a lot of Bitcoiners and crypto traders emerging from the hashes. Um, let me try to offer you my view also for Bitcoin actually, and I remain bearish for the pair, at least for now, based on the price structure and based on the patterns that we have at our disposal. So basically, I shared these on TradingView. I have this pattern. I shared this chart among our amazing community. I was seeing these as a potential heads and shoulders, and I was saying that the breakout above this trend line should trigger upside momentum for the pair, and if that happens, we should pay attention to those levels initially between the golden fib and the completion point, the 168 extension again and always, and the 200% Fibonacci extension, which is nothing more than an extension for this inverted edge and shoulder. So if you click play, you'll see the price approaching those levels, breaking above this structure and approaching those levels, and started to feel that pressure and started to fall. So basically we are now trading that major completion point, is still trading there. We are also trading below, or we are breaking below this most recent ascending trend line as support. Obviously we are trading above this major trend line resistance. I will delete this trend line for now. So we're still trading above these, or we are, let's say, breaking below this trend line support there. So basically I wait for the default target for the pattern. So I want to see 81.36 on Bitcoin as a first target, and then eventually the 50% fib at 78.10, so approaching the previous daily fractal and the previous structure high. So I believe the market will retest, or at least based on the expectation, or the default expectation for the pattern, we can expect one of those, or if not both targets to be reached, but at least the 38% fib, and then later a second target position at the golden fib. As all, this is the crab pattern printed at 168 extension, so that's the reason why we target the 38% fib initially, comparing with the shark pattern that tends to search for the 50% fib immediately. So actually, basically, I want to search for the golden fib as a second target, eventual second target there. So we have the 74.83. If you go into a lower time frame, also reinforcing the idea for shorts, we have this bearish, another crab pattern, a lower time frame or a lower degree event, also nailing the, or not nailing actually, but also completing the pattern at 168 extension, new high, and immediately falling below. So after this bearish swing, or at least this bearish candle there, we have this sideways moving process, so we need to wait. I see this as a consolidation process, nothing more than that. I believe there's at least another swing low for a third wave structure. Basically we see this as a first wave, all this structure as a second wave, and eventually we will have another swing low to complete at least a minimum three wave structure, which is a default, or which is the minimum that the market tends to print for us. There is always a minimum of a three waves structure inside the market, so we need to pay attention to those, to that eventual new low on for the Bitcoin. So that being said, I still waiting for that to happen. As we can see, we have also a third drive there, and well, but that being said, I still believe there's room for
for more bearish momentum for the Bitcoin. So that completes my fast approach for today. Not so fast. So sometimes we expect to take just a few minutes, and when we see it, it takes you 1 hour and a half to to show you just a few charts. So I hope you enjoyed this video. Um, with special attention, as you mentioned, as you notice, to the 168 extension, Fibonacci extension. As you can see, it is one of the Fibonacci reversal extension levels, and when at confluence with price structure and other Fibonacci levels, it may have some decent impact inside the market. So pay attention to those levels, and I hope you really enjoy this content for today. Wish you the best. Safe trades for all of you, and all the best for you and for your families. Thank you for being here once again. And if you enjoyed this video, just click that like button there, and thank you again for being here and for following. All the best. Thank you very much.